explaining to you guys my process, my mindset, and what changed for me to finally be able to experience just getting funded after passing my phase 1 and my phase 2 of the Forex funder, and the experience actually being funded. If you like this video, don't forget to give me a thumbs up, like, subscribe to the channel, and leave a comment. It will definitely help out with YouTube algorithm, and I will greatly appreciate it. I'm gonna see you guys after the intro. Let's get it. You did. So if you guys been watching my journey for the past 3 years, August the 12th, 2023 was my 3rd year. I can actually say that this year so far, into my 3rd year, has been a success. For the most part, I can actually see the results. I've went back and watched my old videos. Shelly. I went back and watched my old videos just to see my progress and see how much I've developed as a trader, and not just that, how I was able to develop psychologically, and how trading just changed me as an individual altogether, and like my understanding in the markets, it allowed me to understand myself as a person. But I'm gonna explain to you guys certain things that has changed the most to finally allow me to become a profitable trader. I'm actually glad and actually able to say that I am a profitable trader. I am a fucking profitable trader. In the 4th quarter of this year, I'm a profitable trader. So the number one thing I had to realize is that all strategies work. ICT trader, if you're a smart money concept trader, if you're a supply and demand trader, if you're a support resistance trader, if you're a trader, all the strategies work. Most traders out here are struggling because they feel as if they have to change up their strategy. They have to stop doing this and start doing this and stop trading this way and trade this way. To be honest, all of the strategies work. It's of your discipline. That's the main thing everything boils down to. Mark Douglas said this in one of his one-on-one videos with someone. I'm just go ahead and put the clip up right here.
That's why there's so many people who are so close to getting it, but never really get beyond that threshold.
What's that hurdle? Why can't?
Because people don't want to change the way they think. It's that simple. People don't like changing.
How can people get to the carefree state of mind that you talk about?
By changing the way that they think.
When it comes to trading, most traders don't want to change the way that they think. And that's one thing I had to come into terms with myself, is to acknowledge and realize that when it comes to trading and to become profitable, this shit is like 95, if not 100% psychology, because you can have a perfect strategy, but if your psychology is not on point, when you get those wins, you will end up getting back. Your technicals will be 100% down pat, but if your psychology is not on point, you'll end up giving those profits back to the market. And the reason, because you dealing with FOMO, you're greedy, you don't want to see your account go on the drawdown. Because I had a question on my Instagram last week. Someone asked me, how do I deal with drawdown? And to be honest, it's as simple as it is. It's really more simple than what actually seems. Let's just say I have a 100K account. The first thing I'm going to ask myself is, what am I willing to sacrifice? All right, let's say I want to sacrifice 1%. So 1% of a 100K account is $1,000. If I'm going to draw down $500, I shouldn't even trip, because before I even enter my trade, I asked myself what I was willing to risk. And I said I was willing to risk 1,000 to get 2,000, to get 3,000. But some of you guys are you guys get so, like, you get scared and you start doubting and you want to not hit the 1%. Mind you, you've already said that you were willing to risk that 1%. But when you're in 5%, when you're in $500 drawdown, you're panicking and you close out your trade. And what happens? Trade would have went like 700 and then drawdown, and then would have went to your fucking take profit. But because of your emotions and you're attached to the money amount, you get discouraged and you close out your trade in negative, and it would have been a complete winner. So that's one thing that I was struggling with in the beginning, is just accepting my losses. That been my main thing. Mind you guys, if you have not been watching my journey, and you have been watching my journey, I failed six straight phase 1s before I was actually able to pass 3 straight phase 1s. I failed 6 straight, and I was finally able to experience just getting my live account, my funded credentials after passing my phase 2 for the first time. This is my last metrics on my phase 1 and my phase 2 that I was documenting on my YouTube channel. You can see that my phase 1 and my phase 2, I only stuck to 3 pairs. That's gold, AUD USD, and GBP JPY. I recommend you guys to just not focus on so many pairs, because it will just kind of this that you will miss out on entries. Like you will set up your supply and demand or your support resistance area, and price would have like tapped it and start going towards your take profit on one trade. And you want to get in the last minute, bro. I know how it is because, bro, I've been in you guys' position, and don't get me wrong, I still struggle to this day. Just because I experience a funded account don't necessarily mean that, oh, I can pass all my phase ones, all my phase twos. No. That is not the case. So now that being said, I just want to tell you guys that really look within yourself when it comes to trading in this industry, because that's gonna make or break you. All strategies work. Just stick to what's best for you, your personality, your trading style, like your time of day that you trade. Stick to it. Don't change up. You guys have to make sure you remain disciplined when it comes to trading, because like I say, trading is like 95 if not 98 or more percent psychology. I'm going to give you guys an example, and I'm going to give you this example because I know that many traders struggle with this, because I struggle with this, bro, and I still do struggle with this. Let's say you have a 10K, you have a 10K challenge. You're doing a 10K challenge, right? 1% of 10K is $100. You're saying that you're willing to risk 1%, right? If that, and you have your take profit set at 3 to 1, so you're willing to risk 1% for 3%. So you're risking $100 for $300. If your trade goes and hit your stop loss, you should be done for the day, because what I was doing, whenever price would hit my stop loss, I want to make my money back that I just lost, and then some. And what happens? My mind is not really wrapped around psychology. Like it's not on point. They say it was a study that humans are only able to make 1 or 2 financial well decisions throughout the day, and us having to come back from a loss, it will spiral our psychology all over the place, and it will cause us to do other things that we're not supposed to do into a trade. When we see that candlestick just move up a little bit, even in a downtrend, you want to go ahead and buy because the market just printed a small bullish candle. You want to buy, and then what happens? You get liquidated and price continue to dump. You're not able to really focus that well on your losses. I recommend you guys to look, and this is just based on my opinion. Even though I still go outside of this, but it's just like my psychology is really on point, I'm going to get better at it. Whatever I risk, tell myself I'm going to risk throughout that day, that's going to be it. After I hit that, it's over with. And my take profit, I want to just hit my take profit. I just want to be finished with it, because as for me, I'm gonna tell you guys my trading plan, like something that's part of my trading plan. When I do my prop firm challenge, my very first trade, I'm looking for the highest probability trades only. I will pass up supply and demands. I will pass out many of them, but I will wait for one that has everything in sync. Higher time frame support resistance, higher time frame supply and demand. Not just that, we have some imbalance, some liquidity, and a beautiful supply and demand with a break candle entry. If it does not have that, I'm not going to risk 2% on my first trade. I will only focus on the highest probability trade on my very first trade. I'll risk 2%, and my take profit may be 4%. My take profit may be 6%. My take profit may be 8%. Mind you, I'm risking 2% on my very first trade. It's gonna be highest probability trades, and then from there, once price hit my take profit, I'll be only focusing on 1%, because now at that point, if my take profit hit my 4%, I'm up $4,000 on a 100K. I'm up $400 on a 10K. My main thing now is to maintain it. Now let's say I'm at 4%, right? I'll be risking 1% for 2%, or 3%, or 4%, depending on what my take profit is, whatever liquidity is. Because my main thing, my take profit, I'm targeting liquidity at the next break of structure. That's literally what I do, and it works perfectly well for me. Once again, I said in the beginning of this video, if you're interested in the best prices when it comes to trading a prop firm from 10K to up to $1 million, use the link in my bio. Make sure you use code BF60 to get 60% off with 250% refund, and you only have 2 days left. Take advantage of this Black Friday deal before it goes away. That'll be it for the video. Until next time, you guys already know what it is. Deuces.